Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good morning, everybody. How y'all doing? What is this thing doing? I don't want to share nothing. Oh my God. I got too many windows open. Where is the freaking thing at? I got too many windows open. You know, for real, yeah, look, y'all hold on for a second.
Can't hear you, Tim.
I think he went on mute on purpose. I think he's on a call.
Sorry about that, y'all. I'm beyond. I'm 38 hot right now. But good morning, everybody. If this is your first time tuning in to Tim's Tidbit, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty thank you for always tuning in at Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. You see it behind me. You see it on the shirt. That just means big spot if you don't hablo español. And you in tune to another episode of Facilitation February. Today is the first day of tape reading with the Facilitation February series. We are just about done with going through the videos. This evening, we're going to finish up the videos. We're going to do the market maker models. Then we're going to come back and do the power of 3 a little bit later after that. And then tomorrow, we're tape reading at 7 p.m. to 8 p.m. Wednesday, we tape reading again from 9 to 10 a.m. Thursday, 7 p.m. to 8 p.m. And then Friday, we're going to end the month with tape reading from 9 a.m. to 10 p.m. Do me a favor, hit a like for the algorithm. If you're not subscribed to the channel, please subscribe. I'm kind of in a mood right now. Kind of in a mood. Tell you, boy, it's hard being a good Christian man out here in these streets. Shout out everybody that's tapping in, man. Shout out everybody. Shout out Run the Green with the new picture, the new profile picture. Shout out Run the Green with a new profile picture. She ain't staring at me no more like Yolanda and light skinned Deborah be doing in they thumbnail pictures. Just be staring at you. I know that I ain't got my glasses. This Yolanda, all the glasses don't look the same. This how Yolanda be looking. Every time I look over there. She light skinned Deborah, she be looking like this. Face filled up the whole. They face filled up the whole little square. So it like this, and I got it up on the big monitor. So it's like they should be looking at me like. I'm not a bull or a bear. I'm a beast. Yeah, hell, man. Hey, man. Shout out Marco in here. We got Jim in here. We got light skinned Deborah in here. We got D up in here. I ain't seen D in a month of Sundays. We got Valentine up in here. We got Rhonda up in here. We got Honey. I ain't seen Honey in it. I ain't seen Tish in a month of Sundays. We got Steve up in here. We got Yolanda up in here. And shout out everybody that's over on YouTube. I see Hit Learn and Share over there. Where's J-Rock? Man, I ain't seen J-Rock in forever, man. Where you been hiding at, Barack Obama? J-Rock Obama. Where you been hiding at, J-Rock Obama? Shout out Thomas Chun over there. I ain't seen Thomas in forever and a day. Sam B. Sung. I don't remember that name. What's up? What's good with you? I don't remember that name, but hey, man, I'm frustrated right now. If I, you know what I'm saying? If I don't remember your name, man, I'm sorry, man. What's going on, Royce 06? Look here, man. I'm gonna jump over to the screen in a second. I'm opening up my apps and stuff now, opening up TradingView right now. But just so you know, just so y'all know, we are not doing no kind of signal service. This ain't no signal service. We not trying to trade. See, I knew I was still sharing that screen on Zoom. I couldn't find a thing to stop sharing the screen. I knew it's been sharing the screen the whole time. I knew it was, and I couldn't find it. It was making me mad. It was making me mad. Oh my goodness. And on top of being frustrated, I got to share this with y'all. Y'all know I got to share this with y'all, right? I'm going full screen. I'm going full screen for everybody. I ain't gonna be able to go on and think about the candles if I don't share this with y'all. So my honorary third son, right, that's staying with me. Yesterday he come in, he like, hey Mr. Rogers, I'm getting ready to go over to my girl's house. She picking me up. I'm gonna go over there. I'll be back. I said, okay. It was like in the afternoon time, so I go to the door. I say, hey, Sing, come here. I get my key. These are my keys, my truck keys. I take my house keys off. I give him the keys because I'm not gonna feel like getting up and open the door when he comes back. Give him the keys. I say, this is the here. This is the key here. This key here. Look at the number on it. This is the key here to get back in the house. Here. Don't lose my keys, see? Put them in your pocket, see? Right? He's like, okay, yes, sir, thank you. Right? And then, hold on. Long story short, he decides to stay the night at his girlfriend's house and stay the night with my key. And so I call him and he don't answer. Then he called me back. Hey, Mr. Rogers, did you call me? You know why I'm calling you, right? Well, asked Tim to come. I said, I ain't get a key to Timothy. I gave the key to you. Why is Timothy gonna leave out the comfort of what he doing to come over there to get my key from you? I guess I'm just gonna Uber and bring me my key. That was him just calling me back. Mr. Rogers, what time you going to pick up Chris for his appointment? I say 12. Why? I was thinking maybe you could come get the key. You want me to come get my key? Yes, sir, because I ain't got enough for the Uber over there. I said, so just have her bring you. She don't have the car right now. Her mom is at work. And she don't have a car, and her mom don't get off to 3. I said, boy, you know I'm gonna punch you in your throat when I see you. Yes, sir, I know. I'm getting ready for the pain already. Jesus, give me strength. Jesus, give me strength. It's hard trying to be a good Christian man out here in these try to raise a young black man streets. Cause I don't believe in throwing nobody away, especially, you know what I'm saying? Cause I was a young black dude. I was an 18, 19-year-old knucklehead back in the day. So I try extra hard when I'm dealing with 18, 19-year-old knuckleheads. but I ain't above putting these paws on them. You feel me? You feel me? Nah, let's see. Let's see if we. Oh, I hear running. Okay, state to state. State to state. Okay then. J. Rock Obama from state to state. I run Dolo from state to state. Hey man, let's get into it, man. Let's get into it. Let me go ahead and reshare my screen with everybody. Right. First of all, I want y'all to give yourself a round of applause for tapping in and, you know what I'm saying? Wait a minute. Wait a minute. Why I don't hit nothing? Why I don't hit nothing? Did I? Oh, I turned the speakers off. Okay. I had turned the speakers off. I'm like, wait a minute. Yeah, I had turned my speaker off because when I be wearing my headphones, y'all be blowing my ears out sometime. And like trying to work through Zoom and through OBS and all that because y'all be, it's blurry when you do it through the OBS. We won't look at the screen through Zoom because we can't see the lines and all the. And so now I got to try to do it through multiple things and drive myself crazy, right? Now, let's get it. Y'all can see I got a bunch of stuff on my chart. I was in here trading last night. Because I said, hey, look here, man. I'm going to be out here doing tape reading tomorrow. So I got to try to make me a little bit of money today. And so I was in here trading. You see all these lines and stuff on there. Excuse me, see all them lines and stuff on there. They mean something. Everything means something. If you don't know what it means, lock in, baby. Lock in. Gang, gang. Tell them lock in. Tell them lock in. Speaking of gang, gang. Speaking of gang, gang. Hold on. I'm sorry, y'all. I got to reach over here. I'm sorry, y'all. Speaking of gang, gang. Shout out one of the gang, gang members, the multi-talented Miss Rhonda Green, right? This I don't know if this is the first book or the second book, but this is her book, Rhonda Green, right? She the CEO of Rhonda Green LLC. She be writing books. It say on here that she dedicated to empowering female survivors of domestic violence, and she be writing books about dating, right? Rhonda, I read some of this book. I read it here on live. I read some of it, right? I don't read books. I bought this book to support my little sister. This one here, this a hardback copy. I bought it off her website, rundagreen.com, right? I'm put it in the chat. No, I'm not gonna put it in the chat. Here, learn to share. Do me a favor, or somebody that's in YouTube that I know here, learn to share over there. Put rundagreen.com in the chat for me, and I'll pin it to the top of the chat, right? And then she got another book. It's about some butterflies. Before the Butterflies, that's what it's called. Before the Butterflies. That one is a download. It's a download. I don't know if it's got a hard copy too. That's a download. I downloaded that one too, right? And y'all go support Rhonda Green, man. I don't. Y'all know I don't be. God dog it. Get off of there. This doggone Windows 11. This doggone Windows 11 drive me crazy. I ain't even gonna hold y'all. It is driving me slap crazy. It's got this new thing on. It's got this new thing on Windows 11. God dog it. Okay, it's got this new thing on Windows 11. When you come to the top, it's got, you can like put the windows in like different little spots now. It's kind of cool, but it kind of pisses you off too, because I end up dropping stuff in the wrong spot. We gonna get to the tape reading. Y'all don't, hey, I'm already in the mood, right? RunTheGreen.com, right? That's Rhonda right there, looking presidential. That ain't how Rhonda look. That, like, I know how Rhonda look like that, right there. But
That was AI.
Oh, AI. Okay, Alpha. I don't know if Rhonda look like that. That's how I know Rhonda look right there. She said that's AI, right? And so this the book right here, 40 questions before the first date, right? This the one right here. And then before the butterflies, this the download right there, right? Go support RunTheGreen.com. He'll learn the shit. I ain't even put it in the chat. Look, you see how she did you, Rhonda? She didn't even put it in the chat. Let me copy it right now, because I ain't got the type. I can put it in the chat now.
I put it in the YouTube chat.
Copy. I already put it there. But it might not let y'all do it. Like, a lot of times I'll be having it set so people can't put links in the chat. So that's probably what it is. Pin it to the top of the chat. All right. Do me a favor. Hit a like for the algorithm. If you ain't subscribed to the channel, go ahead and subscribe to the channel. You know what to do. Let me put this back on my shelf right here. I put it in the wrong spot. That's going to drive me crazy. All right, now put it in the right spot. Rhonda, get off my screen. Get out of here. All right. So we're going to go there. Still sharing my screen over there. All right. Now I did all that talking and the market about to open. Let's go up to our daily chart and get our bearings together super fast. All right. So last week we talked about we had came down, got a reversal, got a retracement, looking for an expansion, right? We did get an expansion above that high. So we had our expansion, reversal, retracement, and delivery, right? Consolidation, expansion, reversal, retracement, delivery, right? Remember we talked about that throughout the series, right? There's an example of it. We talked about it last week, right? And you say, oh, Tim, it's just going to use that, it's going to candle to candle, right? We're looking at daily candles to understand, but we're understanding what's happening on the lower time frame. Today, we open up with a bearish new week opening gap. If you don't know what that is, the close on Friday to the open for Monday, which is Sunday night, right? The difference in between there, that's your new week or new day opening gap, right? We traded down below this close, right? So we traded down below the close of Thursday, and then now we're having a little move off of that. We also came back down below this monthly low right here. So looking at the daily time frame, all right, we had talked about we want to see if this long-term low, right, stays intact. We want to see if that long-term low stays intact. But Tim, what makes that a long-term low? I'm glad you asked that question, little Timmy Rogers. A long-term low is an intermediate term low with an intermediate term low to the left and the right of it. Right? A happy little family. A teeny, right? That's what makes a long-term low. So we're looking to see if that long-term low will stay in place, right? What we spoke about, we have an intermediate term low here automatically, but what I always say is I like to see that high be taken before I start putting a whole lot of weight on that intermediate term low. It is an intermediate term low because we got a low, a short-term low with a short-term low to the left and right of it, right? He smiles because he's happy, okay? But once we break that high, right, that gives me a little bit more conviction to that low, all right? The market already open. We're going to get into reading them candles. Don't worry about it, all right? So intermediate term low, long-term low, right? We want to see this area here stay intact. All right, want to see it stay intact for the bullish narrative, right? The overall bullish narrative. Okay, keep it in mind, right? You understand your invalidation points. So for this long-term low, we can still come all the way down here, take that low and not take that out, right? We can come out here. We failed to get to the rejection block, right? And rally back up. Okay, so we're respecting the intermediate term low right now, because once we failed to get there and came back up, that's when we created the intermediate term low. All right, and so right now we're respecting that because we came down, failed to come back to that low, right? We haven't taken that low out. All right, now that's our last week's, prior week's low and prior week's high. I mean previous week's low and previous week's high, right? And then when we opened up, we came down below, like I said, below the low of Thursday. Why am I looking at below the low of Thursday? Right? Because that's our rejection block right there. Right? Let's blow it up big now so you can see what I'm talking about. Right? This is our rejection block right here. Right? We came down into the rejection block below the low of Thursday. Right? Your rejection block is relative equal bodies from the lowest wick up to the body right there. That's your rejection block. We came down into the rejection block below that low, right? And starting to move back up. When we go below that, I said that low, but that body. When we go below that body, what has price done? We have swept liquidity. Why is that? Because the bulk of the liquidity is in the bodies. The bodies tell the story, the wick do the damage, right? And the way you can clearly see it is if you were to mark that low right there, I mean mark that close right there, and then change this to a line chart, right? Change that to a line chart. See, that's the low of that area right there. And we have dropped below that low, swept that liquidity, and moving back up now. All right, bodies tell the stories and wick do the damage. Okay, we also drop back below a daily low one more time. Now we're looking IPTA, right? IPTA, what does IPTA do? IPTA looks back 20, 40, 60 days, right? If we come here and we look back 20 days, right? Look back 20 days as we move back through price, right? 20 days back, this is our lowest low. This is our highest high, right? So that is the current 20-day dealing range. I think I may have that marked already. That's our current 20-day dealing range. Yes, it is. Highest high, lowest low, right? So that's our current 20-day look back dealing range right there. Right? What are we paying attention to inside that 20-day look back dealing range? We're looking at PD arrays that reside at our bus stops. We're looking for those PD arrays that reside at our bus stops. Why is that? Because those are the PD arrays that we're going to see the most sensitivity at, right? So as confluence, you're looking back from when the range was created, right? Right. So that's why I got it anchored like this. So from here, this way, we're looking for opportunities at the bus stop, right? From here, this way, we're looking for confluence at the bus stop, meaning this last down close candle of once you trade above there, this entire thing will be a bullish order block. But since we've come down to an anticipatory reactionary point, right, a monthly low, now we're watching this to see if it acts as a bullish order block before we create the entire bullish order block. Okay? Because on a daily time frame, right, trading back above that opening price right there gives us a change in the state of delivery, right? We come down, sweep liquidity, trade back above that. That gives us a change in the state of delivery. But the true change in the state of delivery is when we offer the opening price for February 3rd, because you got consecutive down close candles. So that would be your extreme higher time frame change in the state of delivery, because that's when you officially go back above what would then be this entire bullish order block. Okay, now we have a daily suspension block right there. Do we have that in there? The 4th, February 4th. Do I have that in there anywhere? No, I don't have anything in here. I ain't got nothing in here. I got the 12th. All right, so we got the 12th in here, right? All right, so you want to look at this SIBI from the 12th. That's in there. That's because you're looking at PD arrays as you're moving back through price. So you got a SIBI from the 12th. We closed back above that, right? So now you want to watch how price treats this here, because we come down, close back above it, right? And then now we've wicked down below that there. So you're watching to see if price gets strong enough to get back above it and use it as support. All right. We traded up into this suspension block right here. All right. We traded up into that suspension block. All right, traded up into that suspension block. What we said that was the 4th. All right. Yes, from the 4th. Okay. So we traded up into that suspension block from the 4th. Now, looking at price, okay, if we get our Fibonacci tool, right, and run it from the high and the low of the 20-day look back range, right, that suspension block right there is right on the cusp of premium and discount. All right, so price traded up into a slight premium, right? Respect. First, we was respecting the bottom half. Then we had an indecision candle, and then we came back down into the order block at the lower quadrant of the 20-day look back range, right? So right now we're respecting that lower quadrant, right? Okay, so now what do you want to watch for your higher time frame, right? Right now we're back at the monthly low. You want to see it. How does it treat this February 12th SIBI? Do we get back on top of it and use it as an inversion? All right, use it as an inversion fair value gap. Okay, now why am I saying that? This SIBI here is the first daily SIBI before we trade it down, right, and start to come back up. We failed to get down there to the low. We're respecting the lower quadrant, right? So now looking to see, would that be used as an inversion fair value gap? Same with this, same with this right here. Why? When we displaced away, this is the first imbalance that's created before we came down, swept liquidity, right? And now we're starting to move back up, right? Initially, it was looking like we was about to create one there, but we stopped and had a pullback one more time. Okay, now can we come back and use the February 12th and the February 4th imbalance, right, as support? Now this one here, when we look at that one there, okay, all right, it's in the premium of this leg right here, okay, but it's not being used as resistance right now, right? We pushed through it, came back, pushed to the high, came back, and then created an inversion. So it's not being used as resistance right now, and it resides in the discount of the overall 20-day look back, right? So now the algorithm is showing signatures right now that it doesn't plan on using this as resistance at this moment in time. Okay, Can that change? Yes, it can change. But at this moment in time, it's not using this as resistance. It's kind of pushing through it. It keeps gravitating back towards this suspension block right here. Okay? And being supported by the sorry about that, the lower quadrant of the 20-day look back. All right. Now that we see what we got going on in the higher time frame, looking at our intraday time frame, as you see here, I have this 3 a.m. SIBI from the 19th marked out, right? Want to see how price was interacting to that. As we see here, we came up to the upper quadrant right there on the 4 a.m. candle. So we have this SIBI from London, right? Was the first SIBI created as we came down, right? And then we came back to it during the London here to the upper quadrant, right? Respect upper quadrant, push back down, and now here at the 9:30 open, we've rallied all the way back up to the bearish new week opening gap, and starting to move back down, right? You see I have this hourly this 1 hour suspension block marked out here also on the lower side. All right, so right now price is trading in between premium and discount PD arrays that we were watching in the short term, and then there's your new week opening gap right there. Watching that. Why are we watching that? Again, it's the first SIBI created on this drop down before coming to take liquidity. So as we're trading back up to that area, you always want to watch those first, right? You want to watch those first imbalances that was created on the way down or on the way up when you're trading back into that area. All right. I know we took out the pre-market high already. I'm gonna hide this for a second because it's gonna be too much on the screen if I don't. All right, let's hide this for a second. I already know we took out the pre-market high, and then we probably going to the pre-market low right now. We didn't get a chance to study that because I had a lot going on. This is the pre-market low right there. We're just about to interact with that now. This is the pre-market high right there. Pre-market high right there. So we went straight into the pre-market high on the open, and now we went up to the new week opening gap, and now we're coming back, just about to take out the pre-market low. All right, we talk about that a lot. Let the algorithm establish a range, wait till it engages with one side, and see if it offers you an opportunity to go back to the opposing side. All right, so pre-market high right there. We didn't get a chance to study it in real time, but we talk about it all the time. And so you can see that today that played out nicely, even though it did not hit the pre-market sell side yet, but you can still see it played out nicely. All right, what we talk about, we talk about it time and time again throughout the series. We've been talking about it, and even before the series, right? Let the market establish a range, right? Your pre-market high, pre-market low. Let it engage with one side of the liquidity. It engaged with the buy side, went to an anticipatory reactionary point, right? The new week opening gap. See, and right now from the new week opening gap to now, right? We've been in a sell program overnight, right? Market's in a sell program. We trade up, hit an anticipatory reactionary point, and come back to the opposing side of the liquidity. Now we've just come down and touched that hourly suspension block, right? Remember we said we were in between PD arrays that we was watching. There was an hourly bearish fair value gap up here inside of that daily fair value gap right there. Let me turn that. hourly back on for a second. Right there. That's the hourly fair value gap is graded. The suspension block is not graded, but the hourly fair value gap there, right? We went to it, came down, set relative equal lows with the low of the pre-market, came up, set the pre-market high, rallied up into an anticipatory reactionary point on the new week opening gap, came back down, took out the relative equal lows and traded down into the bullish suspension block. All right, so right now on the from the 9:30 open, where did my 9:30 open go? Did I delete that? Right now from the 9:30 open, let's come back here. Right now from the 9:30, what is going on right now? Okay, so right now from the 9:30 open, right, we got a bearish Judas swing right now. Right, we got a bearish Judas swing from the 9:30 open right now. Okay. Overall, right? Overall, from previous days range, right? Prices in a buy program, right? From previous days range, prices in a buy program, and we've traded down into a discount, right? Pushed up here, came back down and manipulated out sell side. Okay, so we got a bearish Judas swing. Since previous days range is in a buy program, right? You're studying how does price react here on this discount PD array, right? Does it bring us back up and give us a wig snatcher to try to engage the relative equal highs, or does the bearish Judas swing hold and bring us down, right, for more sell side? Because we're above the midnight open, right? We're above the midnight open right now. Now let's go in and start to study signatures, so we can, now that we know where we are in price. All right, so we have, gonna hide this here because it's a lot of lines going on right now. I'm going to hide the daily fair value gap. This is that was a first presentation from something. All right, so since we've engaged the pre-market buy side and pre-market sell side, I'm taking those off. Right, we've engaged them. We understand what we did with them, even though we couldn't study it live. So there it is. Now let's go over here. Right now, this is our opening range high thus far, and this is our opening range low thus far. This is what you want to constantly be doing throughout the day, understanding your algorithmic dealing ranges. All right, so I'm going to go to sell side opening range right now. Right now, this is your sell side for the opening range. Your opening range is from 9:30 up until 10 a.m. All right, so this is our sell side for the. You always want to be aware of your algorithmic dealing ranges, just like we was just talking about the pre-market dealing range. We let it establish a range, and then waited for it to engage with one side of the liquidity and look for signatures to see if it want to engage the opposing side. Right, so now this is our opening range, buy side and sell side for now. Right, and We're going to 950 right now. We just opened. We just went into the having a brain cramp. Help me out. Macro window. Right. We just went into our macro time. Right. We just went into our macro time. Okay. So now we have, right? We have just engaged with our pre-market sell side, right? Went to our pre-market buy side, went to our pre-market sell side. Now we're moving into a macro window, all right? So now we've already engaged the sell side and came to an anticipatory reactionary point. So now you want to monitor, see, does price start to spool towards this buy side, right? Or does it spool towards an inefficiency and then continues to sell side? Because the macro's job is to spool towards liquidity that hasn't been touched and inefficiencies. All right. Let's get a let's put a do this right there so we can watch our other time frames also. All right, so we got this 15-minute chart, right? We got a 15-minute chart over here, 5-minute chart, and this is our 1-minute chart over here. All right, so looking at our 15-minute time frame, okay, we have not created any imbalances. On the 5-minute chart, we've created a 5-minute imbalance and we've traded back up into a 5-minute inversion fair value gap. So this 5-minute inversion fair value gap here, its job is to push price down, right? Its 5-minute inversion fair value gap, its job is to push price down, okay? Now, we said we were in a higher time frame buy program, right? Short time frame meaning overnight price is in a sell program. So our daily range that we're in a bullish daily range, and then in the overnight time frame, we're in a bearish we're in bearish order flow. So now for overnight, since we're in bearish order flow, right, this is designed to push price back down, right? So for the 15-minute, we haven't created an imbalance. So what you're watching for on the 15-minute, because we've traded down into an anticipatory reactionary point, we're watching to see if this 945 candle is going to be used as an immediate rebalance. An immediate rebalance means we have taken this buy side and we've come down taking this sell side, and now you want to see if trading back up into this 915 candle with and eliminated the ability to create a SIBI, if price will stay heavy and continue down into this overnight sell side, London low, overnight low, right? Watching what this 5-minute inversion fair value gap does, right? This designed to hold price down, okay? Now, you're up against a higher time frame PD array that you've traded into, right? What's going in the favor of it, you have a bearish Judas swing at the open. So you got manipulation at the open, right? That's supporting the idea of the sale program continuing. But you've traded down into a higher time frame anticipatory reactionary point that you're looking to support price, right? You always want to know where you are in price, all right? So bullish order block, right? You got a bullish order block here, propulsion block there. All right. What signatures do you look for? Are we respecting mean threshold of the propulsion block? All right. From wick to wick, we haven't reached mean threshold. Body to body, haven't reached mean threshold. This is a 1 minute PD array, so you're watching how price treats it on the 1 minute time frame. All right. On the 5 minute, right, we've traded back up into the inversion fair value gap that's designed to push us down. Right now on the 5 minute, we are respecting the inversion fair value gap on the 5 minute, right? So right now the 5 minute is respecting the inversion fair value gap, right? We've got a institutional order flow entry drill on the higher time frame suspension block right now that's pushing us back up, right? And then coming back down, we're still respecting the order block and the propulsion block right there, right? So the propulsion block, you don't want to see body closures below mean threshold, right? You don't want to see body closures below mean threshold for the propulsion block. You really don't even want to see us reach mean threshold of the propulsion block for a low resistance liquidity run, right? And then bearing in mind, this here is the overall, this is your order block, right? So if price got heavy, this is pretty much the last line of defense, this bullish order block right here, right? That's your mean threshold of the bullish order block at 24,891 even, right? You don't want to see 1 minute closures, but these are the areas you don't want to see 1 minute closures below for the bullish narrative. All right. If you start seeing these closures below those areas, then you be like, okay, the bullish narrative is looking a little suspect, looking a little weak. All right. And mean threshold of the propulsion block is 24,903 quarters. Okay. We're still inside the macro window. Right now, the macro has spooled towards an imbalance, right? We had already traded into the liquidity. Okay, so when we went into the macro time, price started to spool. It started to spool back to the imbalance. All right, we spooled back to the imbalance. Now, we're back. We came back to the 5 minute inversion fair value gap. Is designed to send price back down. Now, we have respected it on the 950 candle. Okay, so now you want to see for the bearish narrative, this inversion fair value gap push us down into, and we got less than a minute left. That will be the actual opening range low, right? So now our opening range low and our opening range high will be solidified in the next 40 seconds, right? So, Tim, what good is that to me? Now we have a new dealing range, a new algorithmic dealing range that's established by the algorithm. Remember, we say let it establish the dealing range, engage with one side of the liquidity, and then look for signatures to see if it wants to go to the opposite side or if it wants to continue. All right. So now in 6 seconds, we'll have a new algorithmic dealing range established. Highest high, lowest low, for the opening range. And for those who don't know what I'm talking about, if we pull up our time is king graphic, right? If we pull up our time is king graphic, right? You have windows. These windows are algorithmic portions of time where you can use them as dealing ranges. The sessions, highest high, lowest low of a session, that's an algorithmic dealing range. Kill zones, the highest high, lowest low in that kill zone, that's an algorithmic dealing range. Macro windows, opening ranges, right? All these are algorithmic dealing ranges that you can trade inside of using the ICT concepts, right? You can only trade, you can choose to trade only inside the ranges of these particular times of day. right? Because time is king. Okay. So it's 10:01. So now, like we said, we got our lowest low and highest high. So our opening range has been solidified. We're still respecting mean threshold of the propulsion block. All right, still respect the mean threshold of the propulsion block on the 1 minute time frame. Right, pushing back up. Right, pushing back up into this 15-minute wick right here. Right, we got a large 15-minute wick right there. As of now, for the 15-minute time frame, we've only just started like 2 minutes ago, right? But watching to see if this 9:45 candle will be used as a immediate rebalance, right? What you want to see, since we traded up into the 9:15 candle, you want to see this 10 o'clock candle trying to get out of here, meaning go ahead and engage that liquidity to the sell side. You don't want to see it doing like a lot of digging back up. That's not an immediate rebalance. An immediate rebalance means the algorithm is in a hurry to get in a particular direction. We had this large expansion down. We opened up here, immediately went back up and overlapped with the 9:15 candle to eliminate, creating a large SIBI, and then that means that we should be get gone, right? But right now it's kind of do hanging around. Still respecting. So you got 1, 2 5-minute candles so far that's still respecting the inversion fair value gap. All right, we have totally repriced the 940 SIBI. All right, had a inside candle there. Then on this 10 o'clock candle, we've traded back up. Look like we just failed to hit the low of that 925 inversion fair value gap, and we're just kind of hanging out there, bouncing between this order block and this propulsion block, right? But bouncing in between the order block on the 1 minute time frame and this 940 SIBI on the 1 minute time frame. We're ping-ponging in between these 1 minute PD arrays right there, and this right here is your first fair value. Matter of fact, that's your first presentation fair value gap right there. I just noticed that, because this is 930 right here, and this is the first SIBI that's created with displacement right there. So that's your first presentation fair value gap right there that we're bouncing in between. Okay, I'm gonna only show this 5 minute on this time frame. Because we got the first presentation over there. Right? I just noticed that. Right? So we've been bouncing in between the first presentation, and now the first presentation has won out. As you see, we were making lower and lower highs. Right? So now the first presentation has won out. Right? We were not engaging the highs. Right? Totally respecting consequent encroachment. So now we're coming down. We want to see if we engage this low, right? Does price show signs of wanting to come back towards the buy side of the opening range, or does it continue to give you signs of wanting to continue lower? Remember, let it establish the range, engage with one side of the liquidity, and then start looking for the signatures. All right, so right now, that 5 minute inversion fair value gap right now is doing its job. Right, there's the sell side. Okay, right, there's the sell side off of that inversion fair value gap. Right, got our midnight opening price down there. Okay, so now here, there's sell side liquidity down here, but this low is lower than that low. So I'm not looking at this as high probability equal lows. I'm just looking at that as sell side liquidity, right? That's just sell side liquidity. If this low here was higher than that low, right? What is that low there? Around like 12, 19, 12, 20, right? If that low was higher than that low, then I'd be like, hey, that's high probability relative equal lows. Just looking at that as normal sell side liquidity because we've already taken that liquidity and moved up. All right. So taking that low. Right now we've engaged the low. We're still respecting the hourly suspension block. Right. So now for our opening range, we've engaged the sell side. All right. So we've engaged the sell side. So during the macro time, price spooled towards the imbalance, which was the first presentation, right? Bounced in between the first presentation and the order block, right? Then came down, took out the low. Now, what are we watching, right? This is the first imbalance that was created when we came down and took out this sell side, right? Create an inversion right here, right? That's a bullish signature that we could potentially be wanting to go back to the opposing side. All right. If we fail to create an inversion here, come back down, right, and take out the low, that's bearish, and that's a signature that we may want to continue down. All right. Come here. All right, we got a minute left inside the macro window. All right, come here from the high to the low, right? From the highest high to the lowest low. Didn't quite get back to a premium, right? If we come to when we left this area there, it did go back to a premium, and we're moving down right there. Right there at that high there. All right, so continue to push down. Uh-oh. Look at we about to close an hourly candle. So we closed the hourly candle. We're watching to see how do we close in reference to this suspension block. And no, we already closed the hourly candle. No, we closed it back here. Yeah, so in reference to the suspension block, right, we closed up there, respecting that suspension block up there. All right, so we've respected that on the hourly time frame, opened up the new hour, we've dropped down, taken out the opening range sell side. Right. That's the hourly suspension block we were watching. That was the lowest imbalance in this price leg right here. All right, we've engaged the buy side, set opening range high. Right now we've come down and taken out the opening range low, dug a little deeper into that hourly suspension block. And so now over here on the 5 minute, we now have the first SIBI that was created before coming down. So now on a 5-minute time frame, you're watching that 10 o'clock SIBI to see if it becomes an inversion. If that becomes an inversion, that's bullish and showing the potential to want to go back toward the opening range buy side. Opening range sell side, watching that, that's bullish, saying I may want to go back toward opening range buy side. Right? Over here on the 1 minute, right? Now we're not, it's like we were defending the upper half of that first SIBI before dropping down and taking out the sell side. But right now, right, we've got a closure above. So now we want to see if we create an inversion or if we, because this is the open of the 10-10 candle, we moved up into the short-term buy side, right? Then if we come back down, take out that low, that's a bearish Judas swing, right? Opening up the 10-10 candle, take out the buy side. If we come back down, take out that low, that's a bearish Judas swing off of that SIBI. If we create an inversion there, right? That's what we said, that's bullish. We've engaged the opening range sell side, and then we would then be starting to show bullish signatures that we can possibly want to go back to the opening range buy side. Right? Then if we get that, right, then you will be, again, we said you will be watching that 5-minute, okay? And if we get that 5-minute, and then you have the first presentation, right, that you will be watching the first presentation, because this is how you identify true support and resistance, right? This right here, it was designed to be resistance, right? Bearish fair value gap, all right? We went up, used it as resistance. It's designed to be resistance. Bearish fair value gap, we used it as resistance to push us down to the sell side. Now, if we get back above that the thing that was designed to be resistance by the algorithm, now this should be true support, right? Use it as support to go up. Get back above this, right? Use it as support to go up, right? Go up to where? The opposite end of this range, right? Sell side, buy side. But Tim, but if it don't ever do it, right now we still, man, we said we're overnight, the short term overnight, we were in a sell program, right? That's why we were looking at all the PD arrays that should support the sell program based off that. And then because we're in a higher time frame buy program, right, you want to know the PD arrays that should support price right there, right? And that right there is based off the higher time frame. And we said this is just sell side. That's not high probability lows, right? Yes, they're relatively equal, but that low on the right is lower. So we've already done the damage. We've already swept the liquidity. So this is just sell side. That's not high probability relative equal lows, right? Because damage has already been done down there, right? Does that mean it won't keep drawing down there? No, it don't. But it's not, you know, relative equal lows that you anticipate the algorithm drawing toward, right? Well, the relative equal lows and relative equal highs, you anticipate price to rush toward them, act as a magnet. Right. Somebody at work, I'm looking at somebody cubicle or ceiling or something like that. That was Kim. Price just starting to hang around a little bit. Oh, it's 10:15, man. I'm on here longer than I supposed to be. What y'all got, man? Y'all got something for me, gang? Who got something for me? Y'all got some questions or something? I got some questions. Right now, price is still respecting bearish order flow, right? Price is still respecting bearish order flow right now. You notice we are not, right? We are not taking out any highs. God dog it. We're not taking out any highs, right? We're continuing to push down through sell side, right? We continue to push down through sell side. We're not taking out any highs. It's continue to respect bearish order flow. But where are we stopping at? We're still stopping at that hourly suspension block. Right? We've done a whole lot of back and forth this morning, right? But when you think about it, what have we really done besides bounce in between our higher time frame resistance and support? What have we truly done this morning? Right? This is the bearish fair value gap. We was watching to see if it resists price. This is the bullish suspension block. We was watching to see if it support price. Right? What have we done besides bounce in between these two? Right? Yes, at 9:30 open, we did wick up into the new week opening gap, but that goes without saying because we got it's a daily fair value gap up there that's in line with that new week opening gap. Right? But we're still from the hourly time frame, we're still just in between these two areas there. Right? But it's still respecting bearish order flow as of now. And if you look at the 15-minute time frame, right, we're still respecting the mess out of that hourly suspension block right there. Right? On the hourly time frame, we closed all the way up here, right? So on the hourly time frame, there's a big wick coming off of that suspension block right now, right? Come to the hourly time frame. See that big wick? That big wick coming off that suspension block right there. And then I just noticed that this is the I was watching this one here, but this is actually I thought did I mark that out earlier? Maybe I didn't. Maybe I took it off because it was too big. Maybe I took it off because it was too big. Right here, this one here. That right there. That hourly fair value gap there. This one here. All right. We're just bouncing in between there. Sorry. Hourly fair value gap. All right. That's Civi there, dropping down. All right. Back and forth in between there. In between those ranges right there. Alright. So still. Alright, we're down here marking time. Alright. Watching that. We're back above consequent encroachment. Right now here marking time. Long wick. Looking to see if we use that wick as support. That monthly low as support. If we create an inversion or if we keep market time and try to move down. Up, we just poked above some buy side there. Right. Just poked above some buy side there. Won't get too happy because we did poke above a little short-term buy side there, but we didn't take out that high. Right. So we just poked above some buy side there. If we poke above the buy side, then create that inversion, right? Now we got some measurable risk over here, and then we would want to watch to see if we take out that high, right? Because taking out that high would be a more significant move. And then if we, come down like here, we just created inversion, traded back down into it, right? So you want to see take out that high, that'd be a more significant move. And if we do take out that high, then you're watching to see if we create the inversion off that first presentation. Right now, that hourly suspension block is proven to be a formidable foe, right? But that old bearish fair value gap and this SIBI here, that was from when we first opened up overnight. Right there on the 6 p.m. That 6 p.m. SIBI, right? Back to the first presentation once again. And for those who wondering, how do you trade stuff like this right here? You wait until the market gives you measurable risk. You wait till market gives you measurable risk based off of the narrative. All right. You say, well, Tim, we're in between both. You talk about the higher time frame is in a buy program, and the overnight time frame is in a sell program. All right. Which side are you gonna choose? You gonna choose the sell program? All right. If you're gonna choose the sell program, you want to sell in the premium, and you want to have measurable risk. Okay. So, like we had said, we're not taking highs. Right, we're not taking highs. So since we're not taking highs, you say, right, come down here, right, from that high to that low, right. When I get back above equilibrium, I'm looking for something to trade off of, right. In the case of this leg right here, there's really nothing in the premium to trade off of outside of this bearish order block right there, right? So if you're looking for a reason to sell, right, the only thing in the premium of this leg right here, that bearish order block, right, then your risk goes up there for the order block, right? You got measurable risk, right? And you're looking to go back to the low, right? Well, Tim, what if I get stopped out? What if it come up here and take that high? Okay, you get stopped out. Right? But you got measurable risk that you can trade in accordance with the current order flow. Well, Tim, what if I want to trade in line with the higher time frame that's in the bullish order flow, because we seem to be respecting this suspension block right here? Same thing. You want to have measurable risk. All right. So price has come down, right? And we traded below there. You say, okay, Tim, we got a breaking market structure there, because that low took out that high right there, right? All right, because we came down, took a low, traded up, made a high, took a low, traded back up. That's breaking market structure. Tim, I'm treating that, okay, so treating that as a breaking market structure, right? So now you come here, say, okay, I got a propulsion block right there, right? I have an order block down there, right? Now when it come back down into the propulsion block, now we got measurable risk, right? The low of the order block right there, that's your safe. You got a mandatory and a safe, right? Below the order block there, your mandatory. Below there, that's your safe. You got measurable risk, all right? If you say, okay, we create this inversion fair value gap, I believe we're respecting that, right? When we trade it back down to there, I'm trading that, right? So the way Michael teach it, stop got to go below that first candle right there. Your safe stop would be You ain't got no. That's it. Yeah. Below that low there, your safe stop will be below the swing low, because that's the lowest low over there, right? You got measurable risk, right? But like I say, you want to, if you're going to trade against what the current order flow is, me personally, I just wait for like that extra confirmation. I don't really look for the lower time frame market structure shifts. I be wanting to see that market structure shift on like the higher time frames before I start trying to trade against the current order flow. But you always want to have measurable risk, right? Measurable risk. You don't want to just jump out there and be like, oh, I'm just going in with a standard 10-point stop loss on every trade that I take. No, you want to take the trade and put the stop in the place where the market should not go back to based off of that PD array. All right. Prices getting like super muddy up in here, right? Because we've been fussing around with this 1004 SIBI for over 20 minutes now, right? We've been fussing around with that 1004 SIBI for over 20 minutes now. All right, we traded all the way back up to the first presentation, right? Traded. Why is the first presentation showing on the 5-minute time frame? All right, traded back up to the first presentation once again. Excuse me, on that 1021 candle. Then we move right back down. Like I said before, right? We did take out liquidity, but I wouldn't put a whole lot into it because we did sweep liquidity right there and we just continued down, right? We're still respecting. We're building up that trend line liquidity, right? But right now, we ain't in a hurry to take off and we're not in a hurry to collapse, right? And if we squanch up the chart and really pay attention to it, right, we really ain't doing a whole bunch of nothing right here. Really ain't doing a whole bunch of nothing right there. Because we look at the 5-minute time frame, right? We're just inside of this little range right there. If we go body to body on those candles, right? If we go body to body on those candles, just inside that little tight range, looking at the 15-minute time frame, right? Traded up, right? We started to move away, but now we're right back into the range. Like I was saying before, when you're looking at this, if you're looking at this as a potential immediate rebound, it's trading back up into that 915 candle, right? This 10 o'clock candle, you want to see it getting out of there, right? Made an attempt to leave, right? But initially we came up first, then we came down, making an attempt to leave. So wanting to get out of there and going up, then down, that is a bearish Judas swing, right? But now we're still stalling out at that higher time frame anticipatory reactionary point. Still in between the tail of two cities, right? Bearish fair value gap up there, bullish SIBI here, right? Ping pong, 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 right? Ping pong, ping pong. On the lower time frame, we're watching this here. Ping pong, ping pong. All right, man, it's 10:30. I gave y'all a little extra time today because the start out was kind of rough. Do me a favor, hit a like for the algorithm if you're not subscribed to the channel. Y'all know what to do. Man, you know, I was thinking about You know, I think you remember the other day when I had went live in the gym. Who was on here when I had went live? And anybody that's on here now? Was any of y'all on here when I went live when I was at the gym on the treadmill?
Yeah, I was on there. I saw the replay.
Do y'all remember when I was like, I got a troll, mama, I made it. I got a troll.
Yeah.
I was thinking about it today. I was like, I got a very small channel, right? We're a very small community, right? And for some reason, when I be going live, the most hateful, racist people, nasty, be coming into my live stream. And I promise you, when I be in other people's live streams, I do not be seeing this. I do not be seeing people in like the person that came in the other day, they called me the N-word. They just popped in and just called me the N-word for nothing. They just and then another person was like, if I had money, I would donate or something like that. I didn't get what they were saying there, but the other person, they just popped in and called me the N-word. And I just blocked them from the channel. But on the other live streams, you remember when the dude was popping up, playing the video of the guy masturbating, and they was putting like little swastikas all on the screen and like calling me a black F word, you know what I'm saying? Oh, look at that little black, you're making me hard, you know what I'm saying? And they was writing the N word all over the screen. I'm like, I'm a small fish in a big pond. Why is it coming to, is it because I'm doing the Lord's work? Why they coming over here with that? And I promise you, I be in all kind of people live streams that do this, and I don't never see people popping into their chats with the, you know what I'm saying, with the racial slurs. I'm looking at price now. We just bounced off that opening range low again, still respecting that hourly suspension block down there, right? Still respecting the hourly suspension block. Price trying to send people to the reset line today. Trying to send people to the reset line today. We just bounced back up. Right here. Oh, this is a beautiful example of true support resistance. Right. Y'all talk to me. Class participation time. Right. Remember when we was looking at this right here? What did we say this was right here? This candle, this 949 candle right here. What did we say that was? What do we call that? Talk to me. What do we call that?
Propulsion block.
That's a propulsion block, right? And we said while we was at that propulsion block, we was looking for it to be used as support. We didn't want to see any body closures below mean threshold of that propulsion block, right? So we used it as support, used it as support, used it as support. When we got below it, what did we do? Look at the mean threshold right there. Used it as resistance, right? Traded up. I mean, we say we took out that buy side, but don't get too happy about it because we took out buy side there. Until we take out that buy side, we ain't talking about nothing, right? Came over here, we got that reaction off of this one more time, and where did we go stop? Right there at what? I ain't moved that line. I drew that line out a long time ago, and look where we went to, right there. Right? Let's see the price on it. The high on that candle is 24,950. The mean threshold of that propulsion block is 24,900.75. So one tick away from there, and then we move down and have taken out more sell side. So what does that mean? Price is still respecting the bearish order flow. So if you were trading, like we said, in accordance to the current order flow, and what we said you had this bearish order block, right? If you traded off there, your stop would be there, and you would be looking for it to go back to the low, right? In accordance with the current order flow, with right there, like I say, it's not a signal service, but we talked about how do you trade it with measurable risk. And then I said if you want to trade with the higher time frame, you would be over here. What would be happening now? Your head would be bust, right? And what did I say? Until I get a significant shift in market structure, I don't like to trade against the current order flow, because price is right now showing you I'm not willing to go higher, even though it's not trying to blast away. We're respecting bearish order flow inside of all of this, right? Well, Tim, you talked about both. Yay, I talked about both sides because we're just reading price, but I also was telling you it's respecting this type of order flow. We ain't been doing a whole lot of nothing but bouncing in between, but we're still respecting bearish order flow. Now we've got back down below midnight, right? So now we've come back down below midnight. What is midnight? That's the true day open. So now, what is that? That's an anticipatory reactionary point. So now you want to watch to see, hey, does that midnight give us a significant shift, breaking market structure, right? Because we're still, you pay attention, we're still hanging around that opening range low, right? We've engaged with the opening range sell side, but we haven't given any true signature of wanting to go higher or lower yet. Because what have we done? So this is the first imbalance we've created, right? Since we well, no, we have a small one right there. We do have a small one there, but right, since we engaged with this, we've been very overlap. Everything's just been overlap, right? And we just came into the midnight. And also, right, that's our 20-day look back, lower quadrant right there. We got the sell side down there. Like we said, it's not relative equal lows, because this is lower than that. So we've already swept sell side there. So just looking at that as just regular sell side. And price is still staying heavy. Right, move back up into that SIBI, still staying heavy. Watching this, see if we start to push down, right? Because we engaged with it low, right? Hanging out here, right? And we went up to the first presentation, came down, went up, back to that bearish order block there, but the propulsion block that we have been watching, right, come down. And when you're looking at bearish order flow, what's another signature of respecting bearish order flow? How's it trading with the up close candles? All right. Are we respecting mean threshold of the up close candles? Right. How are we respecting the highs? How are we respecting the up close candles? How are we respecting the bearish PD arrays overall? I'm thirsty. I ain't had nothing to drink, so I'm about to go. Gang. Y'all got anything? Nothing. Okay.
Sometimes you were sounding low. Was that just me, or did everybody else hear that?
No, he was sounding low. I thought it was my phone, but he was low.
Oh, I was kind of far back from the mic, so My bad.
All right, we gotta run it all back then since we ain't hear you. Let's start over.
Okay. I got something I'm gonna run for you.
These nuts. Got him. Got him.
Yeah. Where we at? Oh, y'all in Zoom, so YouTube heard that. I forgot I stopped sharing my screen in Zoom, so YouTube heard that. Yeah, YouTube heard that. So we're gonna do this one more time just for lump. Yeah, you can run.
These nuts. Got him. Got him.
Yeah, I'll be having to keep sharing my sound inside Zoom. But like for the what's I ain't got to worry about sharing the sound. It's just automatic. But yeah, my bad for talking low. And as y'all see, we still respecting the bearish order flow. Like I was saying before, the up close candles, right? Bearish order flow. Not only is it the highs that you're looking at, not only is it the bearish PD arrays that you're looking at, right? You're looking at how are we trading in relations to up close candles, right? How we trading in relation to up close candles, and you're looking at how we come here, right? See those two consecutive up close candles. We trade up, respecting the mean threshold of it, and moving back down. Right. Time. What time? I got an appointment this afternoon with Chris. Not sure exactly what time he gonna be done. I want to try to start a little earlier because we're trying to finish the whole series. I said I was gonna try to start around 6. I think. Did I say that last night? Then last night I said I was gonna try to start around 6 because I want to try to finish up the series today. Because we got to do 3 videos on the market maker model, and then we got to do 1 video on the power of 3, and then that way all the videos will be out of the way. And so for the rest of the week, it'll just be like tape reading. So it's going to be, so 6. We'll stick with 6. So we'll do the market maker model videos at 6. And we'll go through that. And then take a break for about an hour or so. And then, if it don't take us too long to go through it, then we'll take a break for about an hour. But if we end up going kind of long, then we will take a break. But I don't want to start the Power 3 video no less than 8 o'clock. I mean, no later than 8 o'clock. So if we get on there and it take us an hour and a half to do the market maker models, then I'm only gonna take like a 30-minute break because I don't want to start the last video no later than 8 o'clock. All right. So hey, here to learn to share. Don't be retracting those statements. What you say it with your chest. Oh, my bad. Why y'all ain't tell me J Rock had X something in the chat? Why y'all ain't tell me J Rock had X something in the chat? Hey Tim, why wouldn't you use the smaller fair value gap above the first presentation? Because that one, the first presentation is the one that you looking for the fair value gap with displacement. Leave J Rock, you still in here? If J Rock ain't in here, I ain't even gonna waste my time going through it. J Rock, you still in here? All right. Don't look like J-Rock in here no more, so I ain't gonna talk about it. I done talked about it before anyway. I was just gonna explain it because he asked. But gang, y'all know why I didn't use the one that was above it. It's about displacement. All right, man. Y'all enjoy the rest of y'all day. If you're gonna trade, please trade safe. If you're not gonna trade, please take a copious amounts of notes so you can go back and study what you saw today and apply it to your future trading endeavors. No, I'm not screen recording that. That is, that ain't the long one. And I'm not screen recording anyway. Get a better cell phone. Until I decide to get on Al Gore's internet and share my thoughts on this thing that we like to call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just mean big spot if you don't hablo Espanol. Do me a favor, hit like for the algorithm and subscribe to the channel if you ain't. Y'all be safe out here in these trading streets, man. Gone.